This is a demonstration of exercise 21-6B, lessor entry, sales type lease with option to purchase. Plummer Leasing Company signs a lease agreement on January 1st, 2020 to lease warehouse equipment to Amazon Company. The term of the non-cancelable lease is 2 years and payments are required at the end of each year. The following information relates to this agreement. 1. Amazon Company has the option to purchase the equipment for $20,000 upon the termination of the lease. It is not reasonably certain that Amazon will exercise this option. 2. The equipment has a cost of $165,000 and a fair value of $190,000 to Plummer Leasing. The useful economic life is 2 years with a residual value of $20,000. Plummer Leasing desires to earn a return of 6% on its investment, and collectability of the payments by Plummer Leasing is probable. In Part A, the instructions state to prepare the journal entries on the books of Plummer Leasing to reflect the payments received under the lease and to recognize income for the years 2020 and 2021, and in the B portion, assume that Amazon Company exercises its option to purchase the equipment on December 31st, 2021, and prepare the journal entry to reflect the sale on Plummer Leasing's books. So we know that this is a sales type lease because, for one thing, it is a non-cancelable lease for 2 years, and the useful economic life of the equipment is 2 years. So it meets the criteria for a sales type lease just because the lease term is over 75% of the useful economic life of the equipment. And Plummer is the lessor, and we're going to be concentrating on recording the entries for them as the lessor. So first we need to determine what the payments will be. So Plummer starts out with the fair value of the equipment, which was $190,000. They would subtract from that the present value of the $20,000 residual value. So you would need to find a factor for the present value of 1 where I equals 6 and N equals 2. And that would give us an amount of $17,800 for the present value of the $20,000. That means that Plummer needs to recover in 2 lease payments $172,200. This is an ordinary annuity. We know that because it states in the problem that payments are required at the end of each year. So we would look in the table for a present value of an ordinary annuity where the interest rate is equal to 6 and the periods are equal to 2, and we would find that the factor is 1.83339. We would divide that into the amount that we need to recover, $172,200, and that would give us the 2 payments of $93,924. Now we're going to construct a small amortization schedule for Plummer for this lease. We start out with the balance of the lease receivable, which would be the $190,000, and then we would show the 2 payments of $93,924 that would be due at the end of the next 2 years, and we would also show the $20,000 residual value. So we have the information that we need to go ahead and record the entries on Plummer's books for 2020 and 2021 for this lease. So the first entry that we're going to make is to record the actual lease and sales revenue. So we would debit the lease receivable for the $190,000. We would debit cost of goods sold for the cost of the equipment minus that unguaranteed present value of the unguaranteed residual value. And the reason that we're subtracting that is because since it's not guaranteed, there's always that chance that the equipment would be destroyed or damaged to the point where it would not be worth the $20,000. So we would record cost of goods sold net of that amount at $147,200. We would do the same thing for sales revenue. The sales revenue of $190,000, we would subtract the present value of the unguaranteed residual value of $17,800, and that would give us sales revenue of $172,200. And then we would credit inventory for the cost of the equipment, which is $165,000. Next, we're going to record the receipt of the first payment on the lease at December 31st, 2000. So we would receive cash of $93,924. According to the amortization schedule, we would credit the lease receipt or credit the release receivable for $82,524, and we would credit interest revenue for $11,400. The next payment we would receive would be at the end of 2021. So at the end of 2021, we would receive again $93,924. We would credit the lease receivable for $87,476, and we would credit interest revenue for $6,449. The problem stated in the B part that Amazon decided to keep the equipment and pay Plummer for it. So at that point, we would receive $20,000 in cash, and we would credit the lease receivable for $20,000. And that is the conclusion of the demonstration for exercise 21-6B.